Welcome to the program. This morning we'll take a look at what's happening on global markets and we'll check out earnings season, CSL, Domino's, Telstra. I'm Marty Switzer.
I'm Paul Rickard.
And we're mad about money. Morning, Paul.
Morning, Marty.
So before we get into earnings season, we're in full swing now. Global markets, though, digesting this issue in North Korea. Your thoughts on that and what it means?
Well, at least put it to one side. I mean, the US continues to make headway. I mean, they looked at some reasonably positive economic data again last night. They want to buy it over there. So, the US market heads up, European markets heading up. We're sort of following reluctantly.
Sort of staying in that same sort of 5,700 sort of region, aren't we?
Yeah, I mean, the market's been a little hard on some of the earnings reports, but I guess it's probably a function of the strong Australian currency is probably just dissuading offshore investment at the moment. Also, I mean, we're just sort of, I don't know, the confidence maybe in the market just not there at the moment, but maybe we need to see a couple more really good, some good company reports to get a catalyst for people to buy it again.
So, big one this morning, one of your favourite companies, CSL. Talk us through their numbers.
Yeah, CSL's reported okay. It may not be enough for the market. They've described it as an exceptional result, which I love those words.
Talking their own book there.
They've come in with underlying earnings or net PAT of $1,337 million. That's about $20 million less than some forecasts, but that's up 24% in constant currency on the previous year, largely to do with their acquisition, but also growth. Next year, they've given a guidance for underlying profit of between $1,480 and $1,550 million. That's between about 10.7% and 16% profit growth looking ahead. That's not bad. Yeah. I mean, that's why CSL's trading on that sort of multiple, because it is delivering that sort of increase in profit growth. I think the market's probably going to like it, but it's sort of, the market's been a bit punishing on a couple of the growth companies that have just fallen a little bit short.
Well, that's a good segue to talk about our next company, a market darling that has fallen a bit out of love, or the market's fallen a bit out of love with them, with Domino's.
Yeah, I think it's probably an overreaction yesterday to Domino's. I mean, look,
good margin still.
Yeah, good margin. It was below its own guidance. Remember that the Domino's in March guided towards underlying EBITDA growth of about 32.5%. They came in at about 28-something%. Yeah. Also had sales. They
got whacked, I sort of 14-15%.
Yeah, well, a bit more than that. Also had sales growth in Australia and New Zealand between 14 and 16%. They actually delivered about 13.8. So both on the top line and also bottom line, they were below their own guidance. And then, of course, the CEO announced that he was going to be selling some shares going forward to cover tax bills and matrimonial settlement.
Some concerns around competition, catching up in the technology space as well.
Yeah, I mean, when you're on these growth multiples, it doesn't take much to disappoint. But I think yesterday's market reaction of I think it was about 18% it fell overall, was probably...
Buying opportunity?
Yeah, maybe. I mean, look, I like Domino's as a company. The management team's solid. I don't think you can read too much into it. Look, probably... Let's look for a buy somewhere in that sort of $40 mark on Domino's.
Okay, there's the bell, and speaking of the bell, one of the bellwethers of the ASX, Telstra reporting this week.
Yeah, well, no, just to finish off today's probably the busiest day. We've got to see, got all sorts of companies today. Yep. Tomorrow is Telstra. The big story on Telstra will be their capital management program and their dividend. Probably not the dividend for this year, but their outlook for the dividend going forward. Will they cut it? It's a bit of movement yesterday in Telstra's share price, up something like 7 cents to about $4.27. I did say around $4 was going to be well supported. I did say in this program a couple of weeks ago I bought some at $4.11. I think there's the market starting to reassess Telstra. Let's just see what it comes out tomorrow. But look, a cut to dividend going forward I think will be positive for the stock. And let's see whether they can actually show a bit of both revenue and earnings growth.
And before we go, any surprises about Ian Narev retiring?
Look, I think the inference the market's drawn is correct. That is, his timing's been brought forward. In the one hand, as you said, I've said to you before, Marty, that he had signalled that he might look at that somewhere down the track. But obviously that the bank's decided that it needs to look externally, I think, and has brought it forward.
Paul, thanks for your time.
Thanks, Marty.
That's all we've got time for. I'm Marty Switzer.
I'm Paul Rickard.
And we're mad about money.